Greetings, members, one and all of the Salivation Nation. Is Bitcoin overtaking gold as an inflation hedge? Let's explore. That is the question of the hour, and maybe of the month, perhaps even of the year, especially considering the performance of gold compared to Bitcoin, and really cryptocurrencies in general. We are living in a very interesting time, especially since the pandemic, as there's been an increased and laser focus on digital assets, and especially ways to increase your wealth with these assets in light of inflation that we're starting to see creeping up on us. And, you know, the term transitory inflation is something that really has not really edged too much with gold, especially compared to where we saw the prices go next year before transitory inflation was really even a thing. But gold rose for a whole different reason last year. But this year, there's probably an even bigger reason why we should start to see gold go up. But I'm going to be referencing an article here from CNBC that talks about this, about these two asset classes, one digital, one physical, and how they're kind of working in tandem and in some ways against each other. Gold, essentially, for some folks, is under threat from these digital assets. So we're going to take a look at this and see exactly what it's about. You know, we've talked about Bitcoin and comparing it to gold and how they really are different, but there is this concept that Bitcoin is the new gold. But according to some authorities in the gold space, cryptocurrencies rise as a phenomenon that they can't help but acknowledge, and considering that Bitcoin has outpaced gold substantially year to date, with the digital coin up nearly 133%, whereas gold has been down about 4% over the course of the year. A divergence calls into question whether investors are opting for Bitcoin over gold as a hedge against rising inflation, but the strategists behind the world's largest gold-backed exchange-traded funds beg to differ. And actually, even though I'm not much of an exchange-traded fund type of guy, you know, we know that even though these ETFs aren't backed by physical gold on a 1-to-1 ratio, in other words, it's a derivatives market, there is obviously some correlation there. And even in the physical, we know there's correlation. It's why we buy the metals in the physical form to have in our portfolios. I think it's quite possible for these two assets to coexist quite happily in the market because they do completely different jobs. George Millie Stanley, chief gold strategist at State Street's SPDR ETFs, told CNBC and in a conversation on ETF Edge on Monday, the SPDR Gold Trust, which is the biggest ETF in the world backed by physical gold, at least in part, will enter its 17th year in the public markets on November the 18th. It is down almost 4.5% in 2021 and up around 281% since its 2004 launch. The historical promise of gold to investors has always been twofold. One, that over the long term, and I stress this, and I do too, big time, over the long term, gold can improve your returns, and it can also help you reduce your volatility. And that is definitely gospel truth. And it does take patience because it is a long-term proposition. And again, it's about hedging yourself. It's an insurance policy, which in some ways, in a sense, can act different than a hedge. It probably should be seen more as an insurance policy than a hedge at this point. But I digress away from the article's intent here. While gold has a track record of improving risk-adjusted returns over longer time periods, the holy grail of any asset allocator, digital coins carry more risk, increasing volatility and making returns subject to their often drastic short-term swings, the strategist said. That's why lasting inflation will likely draw gold back into favor, he said. And that is the key. Lasting inflation is what it's going to take. We look at the over periods in history, gold didn't always move in tandem with inflation over a period of months. Sometimes it took longer. Gold is a very good preserver of purchasing power during periods of sustained high inflation. In other words, many months of inflation at over 5% a year. In those kinds of periods, which we saw last sustained in the 1970s, the gold gave annual capital appreciation equivalent to about 16% a year, or a real return of around 11%. Right now, we've had inflation at around 5% for maybe 3 or 4 months, with everybody telling us it's transitory, it's going to pass. So I'm not at all surprised that gold hasn't responded to these inflation numbers just yet. I actually agree with that analysis, and because a lot of it is psychological. Yes, you and I can laugh at transitory inflation, that term, that turn of phrase coming from the Federal Reserve. They're the ones that invented it, just like they invent money out of thin air. We can laugh at it, but nonetheless, what we can't laugh at is how markets react to it. And they are. Bitcoin and other digital assets may be siphoning some capital away from gold, but it's too early to say if it's because they've successfully hedged against inflation. Granite Shares founder CEO Will Ryan said in the same interview. And I would say that's the understatement of the year. It is very different. Bitcoin and other digital assets are on fire right now, just like certain stocks are on fire right now, because they are paying on the promise of, hey, this is a cool thing. We're going to grab this Bitcoin or this Shiba coin or whatever that new found thing is. And by the way, I have nothing against people that want to put their money in that and make a quick buck. I've even thought about looking into it, and I still might. But that's money that I certainly will write off as a potential loss. With gold, you have it. You hold it for the long term, which is why the physical is so important, because you are taking a risk with the premiums you pay on gold, although much less of a risk than silver. And by the way, I'm not anti-silver when I say that, because I'm bullish on silver too. It is volatile, but it has much more upside potential, I think, than downside at this point. Bitcoin and other digital assets, they have they're still a new thing, really, in relative terms, whereas gold has been out there for years, for thousands of years. And so with the market cap of Bitcoin and other cryptocurrencies, absolutely they are attracting capital. To the extent that they're attracting capital away from the gold market, Ryan doesn't really know. The reason why people are buying Bitcoin and other cryptocurrencies at the moment is highly speculative. That's a complete risk-on situation. It's less defensive in my mind. The reason why people are buying gold at this point is much more defensive. So take that into account. When you have people that are gambling, well, and I don't want to use that term, that's a derogatory term, but they're willing to accept the risk for a big reward with Bitcoin, that is an offensive move, whereas gold is a defensive move. The reason why people are buying gold at this point is because of that defensive reasoning. It's around the inflation story. It's around the long-term preservation of capital or purchasing power. And by the way, we also talk about it as wealth preservation. You think about it. What is wealth? Wealth is the accumulation of something of value. And dollars are, you have a lot of these in your possession, well, you would have a lot of wealth. Let's say you have 100,000 of these. That's a lot of money. It sure is. But $100,000 today is not nearly what it was 5 years ago. And definitely nowhere near what it would have been 50 years ago. But these currencies, this Federal Reserve note here, which is legal tender for all debts public and private, is by design from the Federal Reserve losing value every year. Normally at 2%. Now it is 5+%. And it will continue to do so at the track we are on. Gold prices hovered near 2 months high recently after the Labor Department reported producer price index rose 8.6% year over year in October, which is the highest annual rate in over 10 years. So we've seen some bounce back for gold, but again, they're different enough. Bitcoin is different enough that a reasonable person could not see Bitcoin as a hedge against anything. Bitcoin is it's something where you can make a lot of money quickly, but you can also lose a lot of money even quicker. And so when you lose money quick, or you gain money quick, just like with silver, but at an even more accelerated rate in the crypto sphere, you're talking about a very speculative asset, because you don't know, and it's a speculative asset that is backed by nothing but the energy it took to create them. How do you really measure that energy when many people are now finding that the blockchain, which is the ledger that is used to create those coins, is something that is flawed. It is not very efficient at all. There's other aspects that are coming that are going to be much more efficient down the road. We'll see where it goes, but I think that gold is a metal that has proven itself. It takes a lot of energy to produce gold, but once you have it in your possession, you know that you have something of value for not only just the intrinsic value of it, but what it costs to produce it, which is obviously a lot less, because we're talking in some cases under $1,000 an ounce by recent reports. But with fuel costs going up, it's going to get more expensive. It really has no choice but to go up for inflationary reasons, and especially with fuel cost. But what does it take to produce an ounce of gold? Think about that, and the value that it contains and it has for thousands of years compared to what it takes to produce a tenth of a Bitcoin. There's a lot of energy that goes into that, but it's not a measurable amount of energy. And it's a digital asset that essentially can really disappear. And in fact, in many ways, it kind of has for some people that have lost their passcodes. There's Bitcoins that are unclaimed out there, whole Bitcoins that are unclaimed out there, maybe perhaps never to be recovered. I'd be very surprised, because of the very nature of what cryptocurrencies are about, that it could be recovered. If anybody is an expert in that area, I'd be very curious to know. But once a Bitcoin is lost, I'd just say it's very, very difficult to recover. Gold is never lost, always recovered, even if it's dissolved in aqua regia. I even covered that topic in a video about a Nobel Peace Prize made of gold recovered. Nonetheless, there's something to be said for Bitcoin as a speculative asset, and I applaud and congratulate everybody who has made a lot of money on it. And I pray that nobody loses out on it, but understand that risk for sure. Nothing against Bitcoin. Whereas with gold, you have something that is foundational as a wealth preservation tool, as a way to protect yourself and to preserve your purchasing power down the road. It's just going to take time. And is Bitcoin stealing some of that thunder? Perhaps for now, because there's a whole generation of people that really don't know much about gold, and they know just enough about Bitcoin to see the returns that they've been perhaps getting, and it's been all positive for them. But stay tuned, because anytime you buy something and it's all positive, as quickly as it falls, or as quickly as it rises, just as quickly it can fall as well. If you are a Bitcoin investor and never considered gold, hey, maybe with some of your Bitcoin earnings and profits that you've made with Bitcoin, it may be good to park some of that profit into gold. No time like the present, that's for sure. I want to extend a multitude of gratitude to you all for taking the time to watch, and to encourage you to please rate. Please share this video as well, comment, and subscribe.